stock cards are a vital component of the perpetual inventory system, and a stock card is made up of 4 sections. So we start with the details section. That records the details of all the stock and all the transactions of stock. So you can see here we've got the date and a reference number, which is a document number. So we've got some invoices and receipts there. We've then got the in column that records all movements of stock into the business. We've got the out column that records all stock or movements of stock that leaves the business. And lastly, we've got the balance column, and that records how much stock is left, its total and cost. So you can see for in, out and balance, we've got 3 things each time. We record the quantity, the cost and the total. So we've got quantity, cost and total or value, and same here. So in balance, for example, so take this one here, we have 45 units at $200 for a total of $9,000. So in reality, businesses buy stock at different costs. So if you go into JB Hi-Fi now and want an iPad, Apple might sell them to JB Hi-Fi for $200 one day, but then next week the price goes up to $210. Now you don't see that as a customer, you just see the product on the shelf for sale. Let's say it's at $500. You don't know which one was $200, which one was $210. So what we do is, as a business, we're going to record that in a stock card. So in this case, let's say on June the 1st, we bought 5 iPads from Apple at $200 each. That would go in, we can see the date, 1st of June. Reference was invoice 11. We've got 5 units coming in at $200 for a total of $1,000 and a balance of 5 at $200 for $1,000. What about on, let's say later that day, we buy another 30 iPads for $210 each? Well, we've got another coming in this case we've got 30 units at 210 for a total of 6,300, and then that leaves in our balance column, we actually put them in FIFO order. So the ones that were first in were the $200 units, so they'll go first. 5 at 200 for 1,000, and then the 30 at 210 to 6,300. What happens if a customer comes in and buys 6 units? How do we determine the cost? Are we going to do all 6 at 200, all 6 at 210, or maybe half and half, 3 at 200, 3 at 210, or 5 at 200, 1 at 210? Anyway, the point is not, we don't want to think about it. All we want to do is apply a very basic system called first in, first out, or FIFO. So based on that, we will just assume that the first stock in is the first stock that's sold. And it's important to note that there's going to be one stock card for every single product that a business sells. E.g., for smartphones at JB Hi-Fi, there will be a stock card for iPhones from Apple, for the Samsung Galaxy from Samsung, and for HTC, there will be a stock card for each individual type of stock. How does it look in terms of the control account system? Well, what we should have at the end of the period is a balance in stock control that matches up to the total of the stock cards. So in this case, we add up the total of all iPhones, Galaxies and HTCs. That comes to $6,500. That works as a checking mechanism. So we've got a record between the general ledger and the subsidiary accounts that checks to make sure there's no errors present. And we kind of looked at this with debtors, so we want a summary in the general ledger in stock control, just of how much stock we have. Titles of the journals are posted periodically at the end of the period to this ledger. No individual details or transactions will go in the stock control account. The stock cards, however, that's where we will put the individual records, so this is where all our detail goes. So there's no double entry in here, it's just in, out balance. And it's updated continuously throughout the period. That's why it's called a perpetual inventory system. So obviously this is done with computers now these days. We're going to do it by hand, but the principle is still the same. We can also make a schedule of stock cards. So that's kind of similar to a debtors or creditors schedule. And what we can do is list the inventory. So in this case, the inventory item is the iPhone. The product code, if it has one, there should be 15 items at 200 for a total of 3,000. The Galaxies should be 10 at 150 for a total of 1,500. The HTCs, there should be 20 at 100 for 2,000, and that leaves a balance of the stock control ledger of $6,500. The advantages of using these stock control ledger and stock cards are we got better stock control. We can look at these stock cards and figure out how much stock we have at any one time, and that'll enable us to make better decisions. The real advantage is we can identify any slow and fast moving stock. Stock cards allow us to figure out which stock sells well and which stock sells badly. So if something's not selling well, we can just get rid of it. And if something's selling really well, we might want to order more of it. That's another advantage. Reordering stock's very efficient. We can identify a set reorder point, e.g. 5 units. And as soon as the stock card hits 5, we can automatically reorder more stock. And lastly, we've got that checking mechanism, so we can make sure that stock control ledger equals the balance of all the stock cards.